A triple focus for markets, rate worries, M&A and earnings. Welcome to Market Insight. I'm David Pollard. A rise in bond yields on fears that interest rates may not be coming down quickly enough has thrown cold water on market sentiment today. That amid a swirl of headlines as Royal Mail parent IDS accepts a takeover bid, while Anglo American appears to be rebuffing its takeover bid by BHP again. Also on the agenda, key inflation readings in Europe ahead of Friday's crucial PCE price index in the US, and of course, earnings. Well, with me to take a look at all that is Zoe Gillespie, Senior Investment Manager at RBC Brewin Dolphin. Welcome, Zoe. Many thanks for joining us. The saga of the Royal Mail deal could be over, it appears, with parent IDS accepting a £3.6 billion offer from Czech billionaire Daniel Kretinsky. Is that a good deal for shareholders? And what does Kretinsky want in an organisation that has struggled with strikes and loss of market share for so long?
Yeah, I think today's news story, I think certainly is the price that they're being offered of 370 is certainly a premium on the current share price. However, it is considerably below peak levels. So for shareholders, it's maybe a bit of bittersweet because they're getting the uplift. But obviously, if you look at where it was a couple of years ago, it is a discount. I think the attraction to the deal for him is obviously that even though the Royal Mail business has been loss-making, the parcel business certainly has kind of helped offset some of the losses. So he maybe sees the growth there. I think the deal will come with conditions in that they have to commit to keep some of the services and level agreements there. So there are going to be conditions on how it goes through, keeping the name and obviously keeping its headquarters in the UK. So I think certainly to try and get, looking at where it is just now, it's whether we actually see the gap narrow as the deal goes through.
Now, Anglo American had rejected BHP's last-ditch request for more time to discuss a $49 billion takeover offer, dismissing it as highly complex. That must put paid to BHP's ambitions towards Anglo, mustn't it, after a saga that's gone on for around 5 weeks now?
It has, and I think the talks were to try and see if they could get some agreement from the Anglo American board, but the fact that they haven't wanted to increase the deadline for talks really, I think, puts pay to that. I think certainly what Anglo have decided, or they wish to try and do, is break up the business and certainly try and sell off the Diamond De Beers business. But they've got to 5 o'clock today, but it's whether BHP would be willing to put in a hostile takeover remains to be seen. But as you say, the saga has continued and looks like it will come to an end later on today.
Now, earnings today include Pets at Home. Underlying profit was down, but in line with forecasts. But its shares were up this morning. Is that all down to a buyback programme it announced?
So, and also a bit more optimism about the outlook. We've seen that, as you say, looking at the various divisions, the veterinary department and division has done better and certainly has grown more than the retail side of the business. So the outlook for it looks certainly healthier. Even though we've seen kind of revenue coming in a little lighter, I think certainly the growth forecasts going to 24, 25 look a little bit better. So I think there's more optimism about the future outlook for Pets at Home. But as you say, it has been a business that's struggled. And for shareholders, it's a slight upturn today, but certainly has had more than a 20% hit in its share price over the last year.
And just looking ahead to the US today, we get Abercrombie and Fitch earnings ahead of a slew of other earnings from the retail sector in the US. What do you expect there?
I think this is a really strong brand in the US, and I think what they're going to be looking for is stronger sales growth coming through, and whether that trend's going to continue. So I think certainly we've seen it beat expectations in the last quarter, and whether it's going to come in ahead of analyst expectations. And I think will give us an insight into how the US consumer and it is still holding up. So I think it'll be one to watch with interest.
Let's look at the macro picture here in Europe. We've had a surprise rise in German consumer sentiment, and wages were up by a record 3.8% in Q1. And inflation, at least on a harmonised basis, is above forecasts at 2.8% this month. The ECB has all but said it's going to cut next week, but should it perhaps not do that? And what happens after June?
Well, I think today's inflation sort of uptick was predicted, and it doesn't look to have derailed how the ECB see this playing out, and they feel that the cut in June is still predicted. It's whether we're going to see this as a start of many, or whether it's going to just dip its toe in the water and cut gradually. And I think that's maybe going to be more of the case as they see more data coming through. But as I say, I think we are still anticipating that even though the numbers have come in today, there'll be no change in what we're going to see in the June meeting.
And on Friday, the US PCE price index is released. This, of course, is the Fed's preferred gauge of inflation. Do you think bond markets are right to sell off ahead of that? Is inflation still a major threat for the Fed and for the US economy?
As you say, the data coming through on Friday will be pivotal, I think, in the Fed's kind of future outlook for rate cuts. But we've seen sort of the expectations are that inflation has been and will remain sticky in the US. Employment has remained steady and we have seen wage growth come through. So I think it's unlikely that we're going to see cuts coming through anytime soon. And if you look at how certainly Fed officials like Neil Kashkari has come out and said that they're looking for more data that inflation is under control before they're considering cuts. So we have seen bond yields spike up. And I think ahead of that data coming through, we may see a little bit of nervousness coming into markets.
OK, Zoe, we'll leave it there. Zoe Gillespie, Senior Investment Manager at RBC Brewin Dolphin. Many thanks for sharing your thoughts with us today. That is Market Insight. Don't forget you can watch more videos on Reuters.com.